Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today's Friday, midday. As I record this video, market should be open another 3 hours. Let's continue with our weekly analysis. Let's start with the Spider, Qs, Diamond, the Russell, Semi, or the Banks, and the Semi. Let's kind of zoom out here and just kind of follow up with what we've been talking about. I don't know, pretty much last couple weeks here, right? We've been tracking gaps pretty much all throughout the month of August, and finally we saw some development happening, which I've explained on the last week's video, right? And you can see right here, this gap I think was a crucial, right? Because a lot of these up gaps, down gaps were just filled right away. You can see how there are a lot of up and downs. And we've been tracking this gap right about here, right? We've been talking about how we need to either fill that gap or gap it over, right? So you can see the gap, there are a lot of up and down gaps. We got down gap here, up gap here. There's so many gaps were filled all throughout the August. Pretty much built that base, right? That base entirety of August. And we also talked about that something has changed in its character when we saw that this thing got back up to retest the gap area, right? The resistance area, instead of falling back down, because that's what it did. We got up here, tank, got up here, tank, got up here, and I think bears are expecting another tankage. Instead, we came down and filled this gap, and then we gapped up again. And then we actually did throw a island bottom reversal, smaller kind, right? We got the smaller island reversal. We talked about this. You know, I've tweeted out on this day on September 4th. You can see this was gap down, gap up. So really, this was that morning star reversal type of candle there, because we got the gap up, gap down, and this became a 3-day island bottom. And then we gapped up again next day. And this was the first time for the last, month, little over a month, that finally the price getting above this gap area. This gap was never filled, this down gap. So this entirety of the month of August became an island bottom reversal. And ever since then, we saw a little bit of back test here, a little bit of retest. Bears maybe came down to try to maybe attempt to fill that, was not able to do it. Buyers came back in, and we're right back at near all-time highs and printing 300, right? And if you've been following my videos, and like every pullback, I always have to come out and say the same thing. And I talked about I feel so redundant sometimes because I said the same thing here, I said the same thing here. And I get the same exact fearful, insecurity type of tweets and replies from some of my followers. Not all of you guys. All of you guys, I think if you guys truly take my analysis to the heart, and so that you understand that these things happen, market gets into its primary term, intermediate term uptrend, it gets its pullback, and I guess our job is to make sure, find out, okay, is this going to be a pullback within an uptrend, or is this going to be start of a bear market, right? And I've been noting that these pullback is going to be an opportunity to accumulate more, and so we're just back at it, right? It's almost feel like at this point, just bears are just pretty much dumbfounded, right? It's just like, well, can it continue to go higher like this? Well, you guys, bears been asking the same stupid question really since 2013, 14, 15, 16, 17, 18. And you guys follow stupid same people who's been saying the same thing for the last 6, 7, 8 years. You guys watch the same stupid thing that they condone these stuff, right? If you just go back here, let's go to clean sheet here. Let's go back. I'm going to share with you something. So there's 2012, 13, 15, 16 there. This is 2013, right? This is a Market Watch article here, right? Headline says, Doomsday Poll, 87% risk of stock crash by year end, right? Peter Schiff is doubling down on his doomsday prediction. I mean, this guy sells gold, so this guy continues to push this doomsday. We all gonna die. The currency is gonna go to nothing. Stock market is gonna be worse than 1929. So you should be running to buy gold. That's what this guy, and this guy owns or sells gold. And this is how he's gonna sell his gold, to inflict fear. So you bring money out of the market, right? And then buy gold, right? In 2013, what? This is 2013. 2013. Do you know what happened with gold in 2013? That's right here. That's 2013, right? So if you've been long on gold in 2013, well, that was pretty terrible and painful. This guy's been selling gold, right? You can just do a little bit of Google search and you figure this out, and you guys defend these guys like with everything you got, even though I just showed you, right? 2013, that's right here. That's right here. That's right there. Doomsday. Doubling down on his doomsday prediction. Doomsday. That's 2013. That's right here. Market made a huge move. Right? How much move is that from 2013? Wow, 57% run. While gold tanked some 40%, and then it just didn't do anything for like 4 or 5 years, right? And then we got this guy. I think we got this one, CNBC. David Stockman, right? 2015 November. Expect the market meltdown before the 2016 election. And that's right here. How much did the market move? 63% since the 2015 and 2016 lows. And I'm just giving you just three, just couple examples, but they're flooded with these kind of headlines every time there's a decline. And you're stupid enough to continue to flock in to read this kind of stuff. It is crazy. It's crazy. And then, this is just what? Yesterday. This guy sees 75% recession chance, has a warning about the corporate bond market. If you do a little research on this guy, he's been calling crash for the last, 6-7 years. Same thing. And that's right here. So let's look at that as a contrarian indicator, right? So that was that doomsday, that was that, the recession, right? This is here, the 75% recession. So you can see market has moved quite a bit since these guys come out and say crappy stuff. And you guys are dumb enough to continue to watch it and listen to these guys. And if we actually go back down here, this guy's funny here. Oh, I think there's something else. I read it, but there's somebody else wrote it, I think. There was some guy with some funny. Yeah, more people commented ever since I saw it earlier this morning, but whatever. Just whatever. It's interesting how I don't know what to say. You know what I should do? You know what I really should do? I should just get out of a public platform like this, YouTube and things. Just do my own thing and just live my life happily, trading the market and just living my life. Why do I have to babysit babies? You know, these sissies, these insecurity people, always whining and moaning, always Always just blaming everybody else but themselves. Never want to grow, never want to learn, never blame themselves, but blame everything else but themselves. If you're losing money in this market, you should not be blaming anybody else but yourself. See, you don't want to take the responsibility. That's where you're blaming everything else, like Trump, the feds, blah, blah, blah. Same stupid crap story that I've been hearing since 2013 and 14. Right? Always being fearful. You know what? Why not just get out of the market? You know? What am I gonna do with this platform, man? I'm telling you. I'm single. I have a lot of time on my hand. So I do this, man. But you don't have much, you know? The people who truly make money, I'm just going to tell you right now, people truly make good money on a consistent basis. Not stupid people like, you know, these Peter Schiff and Stockman and Gundlach, all these different stupid people, and all these so-called gurus and experts on Twitter and things with the, you know, with books out and all these people, like people really who truly understands the market, right? And truly makes money in and out, right? And this is what some people refer to them as unicorns, right? There are unicorns out there. They're not. They're hidden. Like why do you think they call them unicorns? Because you can't find them. They're hidden. They're not gonna be on social media. They're not gonna be on TV. You know, they're out there enjoying their life, living their life. Only stupid people on this kind of platform, like. There's some good contents on YouTube and things like that. There's some good people on Twitter that I do follow, a few people. But 98, 99% of time is just stupid people. And that's what YouTube is. Think about all the highest views content you get on YouTube, right? Bunch of teenagers acting like a douchebag or like bunch of kids. Like we're talking 7, 8-year-old playing with their stupid toy and they get 10, 20, 50 million views. This is how stupid we are. You know what I'm saying? This is... Okay, alright. I'll just... Sooner or later, I'm out of here. Just letting you guys know. I'm out of here sooner or later. But for now, I'll continue to, do my rants, and I do have good core followers that understand what I'm talking about, and so I'm here for you guys. Spider, do you even need me to talk about this? I mean, what did I say when we got here? Bear's gonna call this as triple top, right? And I said that's not how triple top works. We may see a pullback to cultivate a higher low. And if we do see a pullback, well, it will be a buying opportunity. Remember I said that. You guys follow my video every single week. You know what I said. Right? Bear said, okay, there's a triple top and this is going to come all the way down to 220, 200. It just... Same story every time. Right? So we're back here. And bulls, I think this time around, we may see a pullback to maybe retest this or something like that. Worst case scenario, possibly even filling this gap. But I think there's a good chance we're going to break above it this time around. We might even, continue higher, maybe under the gap of continue higher. Sooner or later, we may retest this. I've been talking about this, that we may see something like that. We may go like this, go up, down, retest a couple times before next leg run higher. So I think this is gonna be important pivot, right? Pivot meaning prior resistance potentially becoming a new support. And the market loves to do that before thrusting higher. Again, I said this before, do not be obsessive with this precise level, right? It's gonna be the vicinity. Market is gonna go up, come down. It's not gonna be like precisely that level before bouncing back up. And sometimes it does. But it's going to have its up and downs in the vicinity or something. It's never going to be pretty. But I think it's going to be kind of a rising pivot before market use that as a stepping stone and go to the next level, maybe 320, 330. And my target's been 320 this entire year. Right? My end of year target is 320. If market really decide to do well, maybe 330. But I think, I've been saying that, S&P could do 25% this year. So it's already 20%. So from 320, that will be exactly 25%. And I've been saying that early part of this year, right? Before a around down here that S&P could do 20%, NASDAQ could do 30, so 25, 30, S&P, NASDAQ 30, 35. And you can see that diamond and the small caps on the banks. Banks caught up a lot. Remember, banks were like lagging quite a bit, and banks is only like 1.5% away from the S&P, right? So banks has caught up quite a bit there. Let's go to Qs. Q's pretty similar here, right? We're just kind of retesting this area. We kept this support going. Qs, we did fill that gap though. On the spider, this gap's still open, which is a good sign. On the Qs, we filled it, and that became at support. And then you can see we're pulling back a little bit there. But I think this time around, we may pull back a little bit or something like that. But I think we're gonna break out, make new all-time highs. Another thing I forgot to share with you guys. Where is that? Yeah, I forgot to share with you guys. Here, you know, I'm going to share that a little bit later. And then diamond, there's a little tiny gap right there that was just filled, so I'm going to get rid of that. So there's no known down gap at this point. Diamond is very close to printing new all-time highs now. You can see that. We got the higher lows going there. Again, we might pull back or something like that. Does it even matter? No. But we're going to probably make new all-time highs. I think worst case scenario, come right all the way back down to retest this area, the gap area, and that in that process retest that 20 MA that we have just crossed. We saw that 20 MA, 50 MA just crossing to the upside. You got that 20 and 50 crossing to the downside. That's how you know the minor term sentiment, short-term sentiment. So once you see this crossing the downside, okay, minor term sentiment is bearish. Doesn't mean whole thing is crashing. It means, well, primary to intermediate term, we're bullish. We're just in a minor term, we're bearish. And we just flip right back up here and we gap that up. Well, minor term sentiment is bullish as long as we stay above those moving averages. Russell 2000, we talked about on the last couple weeks video that these guys are going to start to what? Outperform the market. Remember, I talked about outperform the market. Banks and the small caps, and I heard the same stupid thing a couple weeks ago, or maybe a week ago. Well, the banks and the small caps are gonna bring down the indices. Stupidest thing, because I heard the same thing back in 2016. This is how market resumes. When the market resumes after a correction, you're gonna see these large indices like S&P and the NASDAQ. You're gonna see NASDAQ, obviously, usually always a leader. They're gonna start to go first. NASDAQ and the S&P usually. And then you see usually the small caps and the banks come later and they play catch up. And that's how the market continues to float higher. You see what I'm saying? Like after a certain move, you would think that market is gonna pull back, but what's gonna happen is, and this is I've been saying this for the last several weeks, the Russell and the banks are gonna continue to prop up the market. And you saw what happened on the Russell. We saw that outperforming the large indices. We got a couple gaps here that needs to fill. We got down gap here, down gap there. Let's see if the Russell can fill that. I think once Russell 2000 fill those gaps and those levels are going to act as resistance, that's when we may see a pullback, unless you see this thing gapping up again. Then we may continue higher for the next gap, which is a little gap right about here. But if we do go fill it, we're probably gonna pull back a little bit and then positive. Look at banks leading to that. Look at that, S&P flat, NASDAQ down, diamond pretty much flat, banks up 1.15%. Look at how it just went vertical here, outperforming. And that's exactly what I said last couple weeks. That's how this market is gonna prop up this market, right? As we hit that new all-time high level, as we hit that resistance level, right? You're gonna see, and then we're gonna see these large indices start to slow down, and the small caps and the banks, which many people thought that these guys are gonna drag other indices down. What's really happening is these guys are going to prop up the large indices. I don't, man, I gotta say, I said the same thing in 2016. You know, October, pretty much all throughout 2016, mid 2016, November and all that. And pretty much, I've been saying the same thing, and I always say the same thing. And anyway, let's go to semis. Yeah, semis continues to cultivate higher highs and higher lows, and we are in an uptrend, right? We saw some pullback, right? If bear market was gonna start, then it would have been continued to cultivate lower highs and lower lows. Once it created new highs here, we pretty much neutralized that threat. And then when it pulled back, it became higher lows. And I've been long on SOXL, triple shares of semi since down here. Bought more here, bought more there on those pullbacks. And these guys are up quite a bit. And with the SOXL triple shares, those are up 150%, close to. Anyway, so that's the analysis. I am still running promo here, right? Did a video yesterday. You can go ahead and go to twotradersclub.com, click on the membership. You'll come to this, and you click on this link, and you can go ahead and watch this video if you haven't. I explain in detail of what it entails and things like that. So this video has all of that. Here's a feature member. He's a VIP member. I actually pulled this today. So based, as of yesterday, 81.36%. And this is all achieved not by, day trading or penny stock trading or biotech trading, none of that. I mean, most of my portfolio is based on large cap. You can see here, large cap. I explain all of this in this video here. And you might ask me like, well, okay, how much more can it really go? And again, I've been targeting 4,000 Spider, 4,000 S&P 500 when S&P 500 was at 2,500, or Spider was 2,500. S&P index was 2,500. 250 on Spider, 2,500. So 4,000 on the S&P 500 index. 320, 3,200 this year, probably 4,000 next year, right? And here I want to share this with you real quick. So everybody just gets scared all the time every time there's new all-time highs, but here's a fact here, kind of looking at all the way from 1928 till 2018. So new all-time highs mean more to come, right? So after new all-time highs, stocks are typically positive. So they basically kind of went ahead and checked every time when there's a new all-time highs and see what happened later. So about 12 months later, market is up about 20%. 18 months later, 23%. 24 months, 24%. Frequency of positive performance about 90% of the time, 12 months later. So we see all-time high. Year later, 90% of the time, there's going to be positive performance. Positive. About 20% gain afterwards. 20%, 20. So if you're going to bet that the market is going to crash here after we get these new all-time highs, you have a 10% chance. And maybe you like to bet on those 10% chance. Maybe you're a very avid poker player, right? And you love to gamble and you live on the edge. You love to kind of chase that straight, right? On the river, go all in, right? There's about, I don't know, what did they say? 12% chance to hit that one card. Yeah, you do that, you're gonna gamble your life away, man. I would not recommend doing that. I do play poker sometime here and there, but I would not go after that. 90% chance sound like a good deal for me, and I don't want to go after a 10% chance of possibly market is gonna crash. And so anyway, yeah, promo ends on Sunday. There is a promo link there, twotradersclub.com, and you guys can go ahead and if you have any questions, feel free to email me. Otherwise, come trade with me. Watch this video. You guys have a wonderful weekend, and good luck trading next week.